Okay, the Tata Motors PV is in focus today. The stock's actually seeing a major hammering. And remember, this is post split, so I'm going to run you through a whole host of numbers and brokerage views that are coming in on the counter. Brokerages actually are flagging quite a tough quarter for JLR, and they're seeing a lot of pressure going forward. Jefferies has an underperform with a 300 rupee target. They're saying that the EBITDA loss in Q2 and the extended fallout after the September cyber attack may be disrupting production in Q3 until it normalizes in Q4. They remain cautious on JLR. Why? They're talking about aging models, they're talking about rising China consumption tax as well. They're talking about several other factors when it comes to JLR, BEV transition, high discounts. So while the India PV strength alone is looking good, it may not be enough to offset the drag that we're seeing on this front. Goldman Sachs is staying neutral. They're talking about a 365 rupee target, highlighting a sharp miss again. This is a JLR factor. EBITDA at a negative 78 million pounds versus expectations of 327. That's what the expectation was, and we've come in at 78. Management expects 30,000 units of production loss in Q3 after losing 20,000 already in Q2. So the drag continuing in Q3 right now. CLSA is a little bit more constructive with an outperform. They've actually got a target price of 450, so that's actually looking good, but they are also noting the hit on the JLR front. Minus 8.6% EBIT margin is what they're talking about. US tariff pressure and a complete production washout in September. FY26 margin guidance has been cut from 5 to 7% to 0 to 2%, with FCF turning negative, and on the India PV side, margins are dipping to 5.8%. GST cuts have boosted confidence in small and mid-level SUV demand, but we are seeing that overall pressure on margins coming through. So, a quarter dominated by the JLR cyber attack, global headwinds, production washout in September. India PV does continue to show some resilience, but brokerages agree that the near term belongs to repair mode, trying to build up those production stats. Recoveries are pinned on Q4. The stock has been down 16% in the past 1 year and underperformed broader markets. So that's why we're seeing the kind of hammering that it's receiving in markets.